The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman on this 28th day of September, wrapping up September. The September candle is going to be really important. Can they, I always put they in quotation marks, can they hold the market up a little longer? In fact, you just need choppy sideways. You can go even down to the 17,800, 17,500. Don't break 17,500. That's going to be a problem, but they can hold it here for a little while longer. You've got, 6 weeks to go, election day. All right. So thank you to our hosts for some terrific programming, and I hope that I can keep up that standard. Dow's down 45 at 18,182. S&P's down 7.93 at 2152. Comp index is down 19, down 20. That's interesting, and I'll show you why. At 52.85, the VIX is now in the middle 13s, 13.57. No big deal. Still in the low teens, but it is rallying. It's up 47 cents, and that's giving selling pressure. Importantly, we had yesterday for my subscribers, I mentioned that on Tuesday, the wallet, thanks to one of my subscribers who said, pointed it out. I hadn't seen it up until almost the close of the day, that my Chapman wave trend gauge had flashed a signal to say that somewhere, maybe it could be overnight, maybe intraday, but there should be a 9 to 11 point rally in the E-mini futures, the S&P, and that should affect, so one way or the other, that should affect the cash S&P and the cash Dow. Well, isn't that interesting? Because if you're looking at the E-mini, look what happened overnight. It spiraled back. It went down to 2132 late yesterday. No, what time was that yesterday? I think that was early yesterday. Right there. At 10 o'clock in the morning. And then it ran up sharply. And we were looking at the price going all the way to the 2157? 58, round number high, and bumped into the resistance, and it's pulling back quite sharply. What's really important about this particular pattern is that we've now, and therefore the Dow rallied a little bit, the S&P rallied a little bit, wasn't able to hold it, but the technique fulfilled its obligation, and that was to show that there was some internal strength and residual strength that was extant at the close yesterday, and now we've used that up. Now, what's really important about this, and one of the reasons why we are short, I was going to add to the short on the Dow side, and I thought I'd wait. And here's the reason why. Actually, no, let me just finish the numbers. I did that. Let me go. QQQ series. QQQ, I thought would go to a leg D. Oh, man, is it going to go all the way to Friday to try to get to that 119.23 level for leg D? That's what we need. Why do we need it? In the Chapman wave methodology, remember, make it simple. You identify the lowest, most obvious low bar, and you merely count each successively higher peak. Sounds very simple. Technique I developed way back in the 1980s. And it suggests that every buy signal has the potential to go to a buy mode. If it goes to a buy mode, inevitably it's going to go to a peak D. And that suggests that in this particular case, let's move that out, at the fourth highest peak, you're only at the third highest peak. There's no other way I can counter the low of 113.63, made on September the 12th. That has gone, if it just snuck a tad above the high of the day before the 9th, that was the weekend, 116.49 instead of going to 116.51 instead of stopping at 116.49. If it made that 116.52, I would have said peak A, B, C, and we're in D, and now you can expect to sell off with the Dow. This says that we've got a mixed market, and that's proved all over the show. A mixed market, and my suggestion here is that you've got a leg D, and if there's no new high this week, it makes it peak D, but all within a containment area. This is the 120-minute chart, has made a peak D. Make it simple. I am anticipating, I'm not going to rest everything on it. We're still starting to add to the short side, because that's where I think the action's going to be. But at the same time, we do have a couple of longs. And I'm looking at this and I'm saying mixed market. You've got a couple of the high-tech, a couple of the NASDAQ top 10 that are really holding, the top 4 or 5 are holding everything up. And at some point, they're going to give back those gains. Meantime, this is where we are. And the SMHs, which is the semiconductor, the market vectors ETF, just had a lovely rally yesterday, had a nice move today, went to 67.85, but it's got to go to 68.40. It's less than a point higher to give me that leg D. I need it. It doesn't have to be there. It'll be really unusual to go to pretty much, is that an all-time high? No, I don't think so. No, not in the SMHs, because the high was way up. Yeah, 100.20 was the March high, September high of 2000. And the low was $12.95. I would say there's a bit of a pullback. And now we're up at 67.27. And the monthly chart is still very positive. So I'm anticipating that there's going to be some choppiness coming up. Technically going to a recovery high like that, I'd be shocked if there isn't a D before we have a sharper pullback. That's just the way I'm looking at it. Let's continue. Gold, GC. Gold is down 7 at 13.23. Remember, I said that repellent zone, what I call the Chapman wave inside track repellent zone. Usually it's in a channel. It doesn't have to be. You've got to identify this as an area that is a repellent, and this area at the bottom is a propellant. And this at this point, 13.23. Not good. It got repelled once again. And this says to me that I believe I am correct now in saying that ever since we saw that top forming back in mid-July, and then the sharp pullback that following week into the last week of July, my thinking has been that we're going to see slightly lower highs, slightly lower lows in a consolidation pattern. There might be one sudden spill-off that gives us the real ictus at the bottom where you want to be buying the gold and the gold stocks. At this particular point, GDX is looking like GDX has been following pretty much the same. In fact, it looks much weaker. It was way stronger on the way up, and it's a little bit weaker on the way down. GDX at 25.98, the market vectors gold miner ETF. If that takes out, closes under 25, I would say be careful. My target would be the 23 to 22s. That's where I'd be looking possibly to buy. But you know what's so interesting? Look at the dollar. Dollar can't get out of its own way. It should be for the last few days. It should be, instead of 95.57, the dollar should be at 96.80. Somewhere around there should be testing, breaking over the 95.99 200 period simple moving average. That's the gray line. This is the orange one, is the 200 period SMA. So we want to look at the TLT, and then I'll spend a little time when we get back, because it is important on crude oil. Right now, the TLT is holding beautifully. It's up 8 cents. It's in the inside track. It's trying to get out. TLT needs to break into the 139.60s. That'll be very good. It's at 138.77. And as we go back, I'll show the crude oil. Then I've got a lot of questions coming up. And we'll go to Charlie in Framingham. Charlie, if you don't mind holding, I'll be with you straight after this break. And we will be looking at the JDST. Crude oil is down.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back, and we go to Charlie in Framingham, a town just near me here in Newton, Massachusetts. Charlie, how are you?
I'm doing great. How are you doing, Basil?
I'm well. Now, you seem to have a very good eye in picking out the gold, when gold starts to slide, to pick out the entry points for the JDST, which is 3 times the bear miner gold miners, the junior gold miners. So are you in it?
Yeah, I'm in it. I'm losing $124, but I went down and now I'm coming back.
Oh, you held on to your position?
I held on to that position, yes, because I figured that it was going to be going back up. I'm just hoping it's going to go back up to into the 30 area.
Okay, so let's just do that. Let's just do this for 2 seconds. Folks, what we're looking at here, and we've discussed this before, and Charlie, you don't usually do this, so this might have just got away from you a little too quickly, and then you said, I'm going to hold on to it. Is that what happened?
Yes, exactly. Okay,
so folks, this is what we tend to do. I'm sure that many of us are guilty. I'm using the word guilty because this is not a positive thing. What happens is that we get into a position, and if we don't actually physically place the stop or the buy stop, which I insist with my subscribers, that's what we do. And sometimes I am going to show, in fact, I wasn't going to, but I will show a fantastic example of where we did get stopped out a couple of times, small losses, and the analysis was just excellent. And this darn thing went from the 39s to the 70s. But that happens, and we weren't in it for the ride. Some people, actually, some subscribers were. But sometimes, because you put the stop in, you get taken out, and it's hard to get back in. I find I'm much more comfortable with that mentality, that I've let potential profits go, than to actually see my account slide, because I didn't do that. So I'm going to recommend that you try your very best. I know it's hard to do sometimes, but if you can, now sometimes you put in the stop, and it'll skip the stop because it happens so quickly, or it happens overnight, or whatever it is. But at least try to ameliorate any bigger loss, because when you're holding something, especially when it's 300% the root, it means that every little small move in the root is multiplied 3 times. And I don't even have to tell you, you can see your account go up and down big amounts for small moves. And when it's going up, you say, whoa, very nice. When it's going down, your heart just says, oh, man, that was dumb. I could have got out. So I'm just going to say to you two things. I always do this. When I have a caller who says that I was in it and it went down and now it's come back, my attitude is I have two methodologies. The one is, if it comes back and you're up, now you're still just a little bit down, it looks to me like you're going to be up, so that's okay. I can take a little time to talk about this. It's a 26.19 JDST, 26.17, up $1.24, up 4.97%. I mean, that's on a day like this, a big move like 5%, that is big. So normally what I say is if it gets back just towards a small loss, or exactly at your entry price after sitting through a kind of heart-rending move against you, I do this myself. What I do is I immediately either I get out right away, I can go back right in within 3 seconds, but in my mind, it's a fresh position. So if I got out at 26.08, I could buy it back at 26.08, because now I've got, in your case, let's say you've got a $95 a loss, but I'm looking at it and I'm saying, okay, now I can put a fresh stop in and I'm very comfortable. The other thing to do, that's part A, that's what I actually do. The other part that I tend to do much less, but I occasionally do, is I say, okay, great, now it's back where it was, and I'm actually very strict. I do not take, I try my absolute best not to, when I'm day trading or anything like that, I try not to take big losses. I just tiny little things because I know that the gain is going to more than make up for it. So what happens is I immediately, let's just say you got in at 25.30 and it's trading at 26.07. I would immediately say, okay, it's at 26.08. If it goes to 25, and I'll make a number. You could even give yourself a little bit of a loss on the position now if you're thinking of it fresh, but you've got to be very strict. And I would say, if you're in at whatever price it is, let's say in the low 25s, I would put a stop right now, as we're speaking, at least on a part of my position, probably half of that position, so that I don't go through that again. Because let's face it, you buy 25, it goes down to $18.50. That is a big percentage drop, and now you're back again. So it's not a matter of saying, whew, it's a matter of saying, wow, I was really lucky. I'm now not going to live through that again, and I'm going to have a tight stop, because if I get stopped out again, that's fine. I can live to breathe another day without any worries. So those are two positions. One is you get out, you can get back right in, or you don't have to get back in, but you're now thinking fresh, because I don't like having this little elf sitting on my shoulder, wagging its finger saying, I told you. I don't like that. It just messes up my thinking. So that's what I would recommend. And the other is, if you want, you could just right now tighten up the stop. It's at 26.20. I would even say 25.75 on some position. I'd even say 25.95 on some position. Don't go through this again. Now I can do the analysis. I want to look at you're looking at the, this is the junior gold miners. So I'm going to go to the GDXJ, and I don't think I've got it notated anymore. I used to have it. All right, does it look exactly like the GDX? Yeah, it looks very much. If you don't mind, I'm going to the GDX because I've got this fully notated. The reason why I was saying earlier that gold and the GLD and the GDX look to me like they want to go down further is because if you look at the weekly chart, it's got a peak E in the Chapman wave at 31.79 the week of the 12th of August. It took a big dive in 3 days. It gave back about 4 or 5 weeks of trading. And then it bounced off the 200-period moving average. Right now, it's sitting right on the 200-period exponential moving average. That's the orange line. And the MACD is very poor. The stochastic's at 26%. My thinking is that the GDX is going to bottom when it gets the slow stochastic gets in under 20%, probably in the mid-teens. I would not be surprised if the dollar can actually break out, if the GDX actually goes, in the stochastic goes to the single digits. I think there's a lot of weakness because, excuse me, some of these stocks had 2-3 times gains. I mean, multiple percentages. And that's very unusual. And they had better gains than the actual GDX itself. So I think that we're looking at in the daily chart, there's a lowercase h that goes to an M pattern. So when I showed yesterday, it's the dreaded H that goes to a lowercase m. If 2517 is taken out, it's going to go much deeper. I'll give you the price on the GDXJ, and the GDXJ. And that price would be the low of 41.11. If there is a close underneath 41.11, not only will the weekly chart starting to weaken even more, but the daily will. So if you want to hold on, I'd like to look at potential targets for the downside. Can you hold on 1 second?
Sure, absolutely.
Okay. We've got Charlie holding on, just so I can give him some parameters to look for, what I think will be happening. And then we're going to go to Tim in Denver, look at the IBB. I'll be right back. Basil Chapman, Dow's down 35.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back with Charlie and Frank Mam. So, Charlie, this is what I wanted to say, that the GDX Junior and the GDX look to me like if they decisively take out the low of the week of the 2nd of September, in the GDX cases, GDXJ case, it is 41.11. If it closes underneath there really isn't any support until you get to 32.60. My thinking here is a lot's going to depend on the dollar, and that between 39 and 38 between 39 and 38. I'd even say between 40.20 and 37.80, somewhere around there. That's where we're going to get the big test of whether or not, or 37.40, let's say. That's where we're going to get the big test, whether or not this is like a single leg up, and gold is going to take a much longer recharging or longer time out. But a lot depends on the dollar. I know you look at them both. So if you look at the dollar, I'm not interested in the 95s. It's a 95.73 right now. I'm not interested in the 96s. I am very interested in the 97s. If the dollar somehow by October the 20th to the end of the third week of October actually is testing the 97 area, 97.20. My thinking here is that there's a really good chance, I mentioned this as a possibility yesterday, that the dollar, rather than pulling back, I think it's the favored currency right now. And I wouldn't be surprised if it actually moves higher, and it finally does sometime this year go to 100.52 or higher. That's what I'm thinking. So I at this particular point, I'm favoring the dollar. At this point, it's not a big move, but the dollar, I think, my eye says it's held support, and as long as it holds 94.50, it should go quite a bit higher. And my thinking here is that gold is vulnerable to further declines, and I think you're in the right position. But remember, keep that discipline. Try to keep it in mind. And at this point, I would still say to you, get some kind of a stop in place, okay?
Yes, sir. Thanks so much. I appreciate it.
Thank you for calling, Charlie, and good luck with the trade, Charlie. And we're going to go all the way to Denver. Tim in Denver, how are you?
Good. Thanks, Basil. Thanks for taking my call.
My pleasure. So, you have a position yet?
I am. Yeah, I'm short the IBB, which has been kind of tough. I was going to add to it this morning, and I didn't. Well, what's your view? I like your take on the IBB. I think you're into that. And,
yeah, so,
I don't mean to bug you to death about it, but I like your analysis on the IBB.
Yeah, you know that I'm focused on this thing like crazy. Now, today was going to be a really important session for me. I want you to see how much strength there was based on the techniques I discussed earlier on, those Chapman wave techniques, about the Trin gauge, about the unfulfilled leg D in the Q series and the SMHs. But I've been looking at the IBB in much greater detail over the last 36 hours. Why? Because the characteristic of the double top, number one, the characteristic of the weekly chart holding very well, breaking above the previous arches. This is something that you don't see very often. And it says to me that the next IBB, folks, is the iShares, the NASDAQ Biotech ETF. The high was 400.79 July of 2015, plunged down to 240, and it's had a nice rebound into the 300 area. And now it's kind of, this right here is a very important moment. Is it worth even shorting when you've got a couple of the biotech stocks that are doing extremely well, but you've got some others that are just vulnerable to those 8 or 12% pullbacks on any day? So this is what I'm going to suggest. You've got the IBB short from lower down now, and you've held it?
Yeah, I shorted about this. I'm ahead right now, not by much. And I was going to buy some more of the vehicle I'm using this morning, and I didn't, which is the LABD. I use the LABD, and I'm up now, and I want to add to it, and I was going to this morning, and I didn't. Would you add?
You know what?
Would you add now?
I would not have added yesterday. When I did my analysis last night, I thought, okay, today is going to be a really important session. I'm going to say, I don't usually do this, especially even if you're in a 300% position that has, and it's a short position in an instrument that is actually has done very well on the long side, at least for lately. But I'm going to say, I like it. I like your position. The LABD trading at 16.53. Folks, go to the front page of TFNN. You'll see direction shares. This is the S&P Biotech, a bear 3 times. Now, I'm also going to say that I'm a technician. And all I can say to you is, if there is a rally above today's high of 298.45, there's no way that I'd be holding on to the LABD. Now it's a big difference because it's the high of the day and the low of the day. But I have no choice. My bias right now is to say the stochastic's back under 80%. The MACD is good, but it's starting to fail a little bit. But it's the weekly chart that has held well, and I need price to determine it. And I need to see that the IBB trades under 290. And it's at 293.77. 3 points, 4 points up or down, and this thing is very easy to do even in a day. So I'm looking at it and I'm saying I still see some internal strength. I still believe that the market is being propped up one way or the other, is being propped up here. And the IBB is going to be a really big clue, because everything I looked at from yesterday's candle said how it responds to the sharp move from the low to the high yesterday today. If it closes above yesterday's high of 297, yeah, let me make it this. This is even easier. If in the next 2 days the IBB closes above 297.62, I'm just going to say to you, hey, you can get back in the LABD another time. Don't risk it, because it could quite easily try to test the 300 to 303 level. What was that? 301.80 level that it made the other day. If you ask me right now, would you be inclined to short the IBB or to buy the IBB? To be quite honest, I would say I'd be inclined to short it right here at 293.75, but I would have a 1% stop, a $3 stop on the buy stop. So I don't know if you can do that with your LABD. If you want to make the same proportions, let's just say LABD, it's trading at 1655. I would say to you that if today it pulls back towards 1620 or 1615, I'd have 1 foot on the brake. I'd maybe even lighten up my position just a tad. And the only reason is it hasn't given it up yet, and it is right as a technician. It breaks out, I have to be positive. Breaks down, I have to be negative. I hate saying I could be long, I could be short. I'm just saying to you, if you ask me my opinion right this minute, what would I do? I'd say I would short it at this point, a small position short on the IBB, but I'd have a very tight 1% stop. I hope that kind of clarifies. Normally you'd call me and I'd say, no, not yet, it's going higher. Or I'd say, I think this is a good position. And all I can say is that this is going to be a really important session for the IBB, because if it fails to rally by Friday coming up, and in fact it starts to trade into the IBB, if it trades under 290, I think it's going to be going down for a little bit. I hope that helps you a little bit. Okay.
Appreciate it.
Thank you for calling. I hope I helped you a little bit, Tim. Thank you for calling. Folks, I'll be back. I've got some real good questions. I do want to go through them about the transportation, the index, etc. I'll be right back. Dow's down 25, S&P's down 5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. Dow's down 22. Now, I can't even remember if I showed this. I know I showed it earlier on. This is a pattern that I love to see. Look at this channel right here and a channel right here. This is like a Chapman wave alternate falling axe pattern. What happens is you've got an arch formation. This is the E-mini 10-minute. So from the low that was made at about 9 o'clock, 9:40 yesterday, 21:32.75, we go peak ABCD, pulls back, double top. Remember the double top I was just talking about in the potential for the weekly of the IBB? There's the same double top. I bet the stochastic was pulling back here. And we've got Scott, I'm going to come to you in 1 second. Hi, Scott. How are you?
I'm worn out, Basil. I wore myself out.
All right, now let me do this. I'm going to give you one chance to catch your breath. See if you want. I just want to show that this then pulled back, and then we went to a peak F at 21.58, round number high. Pull back to 21.48 in the E-mini. Then overnight we had the 9 to 11 point rally in the E-minis from the Chapman Wave Trend gauge. It went up to the high of 21.57.25, and we've plunged, and we come all the way back, and it's it's more than a 1-to-1 pattern to the downside. So I just wanted to show that for 2 reasons. One is within the patterns we're looking at, I was asked about silver. Silver's making a pattern that's the H pattern, and it's coming down. I had said that if it takes out the low of $18.46, if silver slides below 18.40, there's a real good chance it's going to go to the 1782 level in the monthly chart, the 200 period, and the 200 period exponential moving average, and the 9 period moving average. Those are the things I wanted to do. So, Scott, you wanted to look at...
Actually, as one of your callers, or maybe it was on your website, I got interested in FTR.
Okay, FTR is Frontier Communications.
I know there's a lot of infrastructure cost, to begin with, but I mean, in one city block, you think how many thousands of dollars they're bringing in, and really you don't have to do much after the truck comes out the first time. You really don't have to do anything. So
right.
That's a lot of money coming in, but as you can tell, I'm very seldom out of breath, but... I'm in it. You know how I do stuff. I mean, very heavily at the 435 right now. So I need. So
let me just tell folks. Folks, we're looking at FTR. This is Frontier Communications, trading at $4.28, down 6 cents. It had a low just the other day of $4.07. Yeah, $4.07 on the 21st, and here it is. It goes from that level to the 440 level. That's a nice percentage gains pulling back. There's just one thing I must tell you. This is a little different just looking at chart patterns. And what I've been looking at I was asked the other day about is that there's a very big difference between looking at a low price stock. Let's go to Your other favorite, let's see, CX, which is trading at $7.83.
See, I'm trying to recreate CX, and you know, and these are totally different companies. But I remember when I got it at 380, you know.
Right, but I'm talking about just as a chart pattern, very low price stock. The difference is that you're now at actually peak A. This made a peak A and had a nice turnaround, the stochastic and the MACD, and then CX, which is trading at 783, made a low, and then it retested. I call it the Chapman wave. This is the retest, but it didn't break the 707.26 low of the 16th when it came down on the 21st. It went to 727. That made peak A, and then it broke out and went above the 9-period moving average. So you kind of right where CX is at on the 26th of September, that red candle. Now I'm going to go to your question, which is FTR. Have a look, FTR, and we'll compare the technicals. You see the technicals are a little different. You see the way that the CX, which is CMAX, turned up with a nice V-shaped pattern. So you really have no choice. You want to see, this is the low for the day. You don't want to see it go much lower than this. And you want to see by Thursday, I would put it no later than Thursday afternoon, Friday morning max. You've got to be above the 9-period moving average of $4.33. In fact, technically, if you want to match the two patterns, not the companies, just the chart patterns, you want to see this at $4.41, and you want to see it by Thursday afternoon, Friday. Then you're looking at something that really has power. Why? Because if it takes out the low of the day, if it goes under 426, which is a penny away, if it goes under that, you've got that pattern that I call the lowercase h. And that lowercase h says, oh, be a little careful because the technicals haven't really confirmed the rally yet. So it could retest the low. That's what I wanted to say. There is a difference between the two.
Let me ask you one quick question also, because I get a lot of emails from people asking me, you know, what's going on with POT. And you had said that, and you're going to ask me, well, why are you trading FTR then if you think it's going to have a rubber band effect? Because, I mean, what do you think on POT? I think it's going to snap to the top side.
Well, on TOT?
POT.
Oh, POT. I should have picked that up. I'm sure
POT,
yeah. You see, this is the same thing that I've just been discussing with you. The MACD and the stochastic and the daily charts weren't quite ready to sustain the move, and that makes it different. Now we're getting a little bit more confirmation, but I need price movement. And at POT at $16.18 potash, if it's able to trade, doesn't even have to hold. It just needs to trade above the candle right there of the 23rd at 16.26. As soon as it does that, the stochastic's going to get away from the single digits and go to the double digits. That'll be your first opportunity to say,
right now it's 1585
now
to 1620. You know, it's got a nice trading range, but I haven't really dealt with it. You see, so, I get hooked on these. You know, for you know, I can buy four for the FTR
I know
for the price
exactly what you're saying. But you know what I'm going to also suggest, just at this particular point, just for this moment, lighten up on your overall positions. Don't change your thinking. Just change your positions a little bit because we're not out of the woods in these stocks.
What would Basil Chapman do if he had 20,000 FTR right now?
If I had FTR right now, I'll be quite honest with you.
Cost average of 431.
At 431?
Yeah.
But you don't usually do this. You don't like to take the loss.
I know, but
you like to hold it. I know what I would do.
It's like when I played with that VIX that time. I don't know this, you know, and I don't usually do this. You never hear stress in my voice, but you hear it now because I don't know FTR, you know.
So let me tell you exactly what I would do if I had it at that price, and earlier on there was a gain in the position I had. I'd be out.
Well, there was yesterday, but Mr. Greedy got involved with me.
Yeah, I'd be out right now. And the fact that you're even thinking about it, which is not what you usually do, you're usually very convinced, I would say to you, Scott, you can always do another trade. I wouldn't hang around. And if by the end of the day it's at 435, big deal. I don't want to see it at 422 because if it hits 422, it can slip. Hope that helps you.
410 last week, so yeah.
Yeah, but this is an H pattern. Be careful. That's all.
All right. Enjoy the day,
Scott.
Basil, and I hope everybody remembers it doesn't matter who's elected president. You can still have a wonderful life. You can still have a good family. It starts with us, not the president.
And the market will always be there.
Not the top down. So
Absolutely. Thank you so much, Scott. Good luck with the trade.
thank you.
Okay, folks, let's do this. I did have some questions, and I want to go to them. I have to go backwards now. So McDonald's, quick question on McDonald's. Don't like it. Don't like it at all. I've got this as a C in the week, in the monthly, but I did a lot of work on it. I could give this an alternate count, and that would make it what I think it is probably a D. So McDonald's, be very careful. Yeah, it could bounce, but I think it's going lower. It was McDonald's, and all right, I'll make a list of what we're looking at when we get back. Basil Chapman, Dow's down 20, S&P down 4. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Okay, so McDonald's doesn't look good. Sonic, I think, was the other one, didn't look good. And ABBV. Dan wants to know ABBV. AbbVie, is that AbbVie? Yeah, that's AbbVie Inc. Wasn't AbbVie Inc. the one is that a brewery? Didn't they take over South African breweries or something? I'm not too good at that stuff. Anyway, made a peak F in the monthly chart, made a peak F in the weekly chart. I haven't done the daily chart. Let me do it quickly. A, B, C, D, E, F. Oh, 3 Fs. F is when you grade it. F is just not such a great grade. I don't like this. I think it's making a hat trick top. I'm a little concerned about it, in fact. It's gone from the 72, about the 71, 72 area down to the 40, 45, 45 area. That's 30 pence. That's about a 50% decline. And a fabulous move to the upside. Okay, let me make it clear. And what is the question? ABBV, short position through puts. if you do you have? Oh, can you look at me? Yeah, if you have a short position through the puts, that's fine. I'm with you. What price? 57.50. Oh, wait, whoa. Oh, November the 18th. Oh, wow. That's, you see, I wouldn't have gone that far out. 57. I would have tried to get the 62.50. 62.50. I feel very comfortable. 62.50. Yeah, I wouldn't have gone. All right, well, you've got what you've got. I'm just going to suggest to you, if you're that far out, you don't have that many, you've got a month to go. No, October, November. Oh, November. All right, November's 2 months' time. All right, that's fine. If you've got those, I think you're going to have to look at a little shrinkage of the premium. But in the meantime, this is my analysis. If at 64.13, ABBV down 44 cents, if it closes under 62, I'm going to make it 62.30. 62.30. Make it 62.14 so I can say to you 2 points. If it closes 2 points low on a weekly basis, you've got yourself something that has the potential, 62.31 is the 9-period moving average, to dip underneath and somewhere in the 68.83 area. That's kind of where my target would be. But on the other hand, this cup formation says there could be a Chapman wave right shoulder failure. And that says be careful because it'll have to go all the way to about the 65.50 to the 66.10 area and then arch over. And that could take 3 weeks before it does it. So I just say be a little careful. You've gone a little too far out. And I would not have paid 59 cents for something so far out, 57.50s. I think you overpaid. And to be able to get that back, you need time in your favor. So I'm going to say to you, Dan, with September, October, by the first full week of October, that's Monday a week, first full week of October. Yeah, Monday a week. If in fact ABBV is trading near the 63 to the 62 area, you're good to go. But if it's not, you're going to see the premium shrink. And if you're able to, try to position another set of circumstances where you can try to go for the 65 November put. And I would try to get it at 50 cents or less. So we'll come back to that. Ask me about it in a couple of days. We'll look at it again. All right, next question. IYT. Yeah, this is just hanging in. This is the transportation. It is above the trend line. I'm going to be watching this closely. The next thing is, let's see, IYT, UPS. Well, Federal Express had a great move. UPS is down at 108.96. Yeah, it's just stuck in the range. All of these are stuck in the range. I had a question about, I'll do it tomorrow. I had a question about CTAS. We were short. I knew there was going to be earnings. I didn't have the courage to say, let's double short at a gap up opening. I think this is coming down. I think it's made some kind of a top here. I don't think it's going to go above 119.94, not in this move. I'll talk about it maybe more tomorrow, but for subscribers, we just had to have a stop in place. I'm sorry, I would actually have liked to have kept it, but you know what, there's always another trade, 1% loss, what can I say? Folks, no, sorry, 3% loss, what can I say? Folks, we'll be back tomorrow. This is going to be a really important session. I'll be back and we'll talk about it on Thursday. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.